But the gist of what I want to say in the time that I have is that all state power relies to a very large extent on a series of myths and superstitions. And of course, central banking is the cornerstone of state power in modern societies. And there are a lot of myths about central banking, about how wonderful it is, about how it serves the public interest in many ways, and so forth. And as an example of this myth, and the myth is carried on by any number of court historians, as soon as the collapse occurred a couple of years ago, the economic depression, and the bailouts started, the Wall Street Journal and Forbes magazine ran a couple of articles about who to blame for the mess. And there was an article in the Wall Street Journal by an historian, a business historian named John Steele Gordon, and it was entitled A Short Banking History of the United States. And I ended up responding to Gordon in an article on LouRockwell.com and an article entitled A Fake Banking History of the United States. But what Gordon said was that the real cause of this mess, this depression we're in, is, in his words, the baleful influence of Thomas Jefferson. That's why we're in trouble. Now, what on earth was he talking about? Why would the Wall Street Journal publish an article saying the economic collapse of 05 and 06 was caused by a man who had been dead for almost a couple of hundred years? Well, Jefferson was, from the very beginning, the fiercest opponent of central banking. He was Hamilton's nemesis, and they had a huge debate over the desirability of a central bank. And the argument that John Steele Gordon was making was that this ideology, this anti-central banking ideology, lives on to this day, and it has so weakened the central bank, the Fed, that's the source of the depression. That's the source of the depression we're in. The Fed does not have enough power. And he goes on to advocate giving the Fed even more power to stabilize the economy and hand out free lemonade to everyone and just make life wonderful for everybody. And so that's what I mean when I say there is a series of myths and superstitions about state power, and the state relies on a number of court historians, as I call them, to perpetuate these myths. And but the real story about central banking, and I'm going to use the American example, but it's really based also on the European example of central banking, is central banking always was just another special interest gimmick. It never had anything to do in America with the pretense of serving the public interest. Although that's the myth, that's the legend that we're all taught. Go to any university library in America and pick up a textbook on macroeconomics or monetary theory and look up what they say about the purpose of central banking, the purpose of the Fed. It's always to stabilize the economy, to stabilize prices in the public interest. The Fed itself says this all the time. But the truth about the origins, the very origins of it, was that the proponents of central banking in America really wanted to bring the Bank of England to America. There are a group of men in American history who admired the British mercantilist system and the mercantilist systems of other European countries. And while they were on the paying end of that British mercantilist system as colonists, they didn't like it much. It wasn't a very good deal to be on the paying end as colonists. But they had this idea that if you're on the collecting end, that's not a bad deal. And so as I tell people that the ideology of Alexander Hamilton and the other proponents of central banking was that it's good to be the king, as Mel Brooks said in one of his movies where he portrayed the King of France. It's good to be the king. So they essentially wanted to bring the British mercantilist system here, to America, as long as they could be in charge. They understood fully well that it was rotten and corrupt and economically destabilizing to them when they were victims of it, but they wanted to be the kings. And Murray Rothbard writes about this in his little book, The Mystery of Banking. And he talks about these men, Hamilton and the other American founders of central banking. What is it that they wanted? Why did they want a central bank, the Bank of the United States? And here's what Rothbard said. To reimpose in the United States a system of mercantilism and big government similar to that in Great Britain, against which the colonists had rebelled. The object was to have a strong central government particularly a strong president or king as chief executive, built up by the high taxes and heavy public debt. The strong government was to impose high tariffs to subsidize domestic manufacturers, develop a big navy to open up and subsidize foreign markets for American exports, and launch a massive system of internal public works. In short, the United States was to have a British system without Great Britain. And that is certainly true. Jefferson and his associates smoked out the Federalists, the Nationalists, as they were also called. There was a senator from the state of Virginia named John Taylor who listened to this, who listened to these pleas for a central bank, and he said this, what was it that drove our forefathers to this country? Was it not the ecclesiastical core and perpetual monopolies of England and Scotland? Shall we suffer the same evils in this country? So these men understood what was up here. They understood what was afoot. They wanted a central bank to essentially subsidize politically connected businesses for the most part. And that's where Hamilton comes in. One of the wealthiest businessmen of the time was a man named Robert Morris from Philadelphia. And he championed the creation of the central bank. And there was the actual first central bank in America was the Bank of North America, and it was deliberately modeled after the Bank of England. And here's what Rothbard says about this bank. He says, quote, it graciously agreed to lend most of its newly created money to the federal government, and the hapless taxpayers would have to pay the bank principal and interest. And it was given a monopoly on currency issue, but the currency was so unreliable that the bank was privatized. And so from the very beginning of the American Republic, there was an attempt to create a Bank of England for America. But they didn't give up. That only lasted a year. They didn't give up. Hamilton himself was the one who first proposed a constitutional convention to throw out the original American Constitution. It was called the Articles of Confederation, and to put a new one in. And the new one, one of the keystones of the new one, they hoped would be a central bank. And here's, again, what Rothbard said. A critical part of this program, the U.S. Constitution, in the eyes of the men who are known as nationalists, was put through in 1791, after the Constitution was adopted, by their leader, Secretary of the Treasury, Alexander Hamilton, a disciple of Robert Morris. Hamilton put through Congress the first Bank of the United States, modeled after the old Bank of North America, whose longtime president and former business partner of Robert Morris, Thomas Willing, was made president of the new bank. And so Robert Morris got his man, Robert Willing, to be the president of this bank. And the way in which Hamilton became America's first Treasury Secretary is an interesting story that's written about in some of the big biographies of Hamilton. He admittedly knew little or nothing at all about finance and economics. And at the end of the American Revolution, Hamilton, who was a brilliant politician, though, he's thinking about what he's going to do after the revolution is over. And he's George Washington's assistant during the American Revolution in the Army. So he writes the wealthiest man in the country, Robert Morris, as sort of a job application. You know, why not start at the top after the revolution? And the way he wrote Robert Morris, though, he first asked another aide to George Washington, a man named Timothy Pickering, who would become George Washington's Secretary of State after the war. And Pickering was known to know a lot about finance and economics. So he asked Pickering, could you give me some books where I could learn something about economics? Pickering gave him some books. He learned enough to write a 30-page letter to Robert Morris, essentially saying, Dear Mr. Morris, I agree with every plank of your economic platform. High tariffs, we need high tariffs. We need government finance subsidies for businesses, and we need a central bank to finance it all. You know, brilliant. And so after the revolution, George Washington has a meeting with Robert Morris, who recommends Alexander Hamilton, the young Alexander Hamilton, as the first Treasury Secretary. George Washington turns to Hamilton and says, I didn't know you knew anything about this. We never talked about finance. And so he literally was an ignoramus about finance until the very last minute. And then part of the myth making that is out there is that because Alexander Hamilton, as a teenager, worked as a clerk for British molasses exporters in St. Croix, he's somehow an economic genius. That's where he learned his economics. That's like saying every clerk at McDonald's is a potential Nobel Prize winner in economics because they're a clerk at McDonald's. In this article I mentioned by Robert Steele Gordon, he demeans Thomas Jefferson because he was a farmer. He was never a clerk in a shipping office like Hamilton was. And of course, it was Hamilton who was the economic ignoramus. It was Jefferson who read Adam Smith and David Ricardo and Jean-Baptiste Say and Turgot. There's a statue of Turgot in Jefferson's home, Monticello. Tomorrow, if you walk in the front door, there's Turgot. It's the first person you see of all the statues in Monticello. But that's part of the myth-making today that even John Steele Gordon, that I mentioned, perpetuates out there. So from the very beginning, this was a scheme to create a bank that would print money to essentially subsidize politically connected businesses at the expense of the rest of the people, just like the Bank of England had been doing for many, many years. Okay, and so we did get the first Fed. It wasn't called the Fed, of course. It's called the Bank of the United States. And George Washington himself asked Thomas Jefferson and Hamilton to write the case for and against a central bank, which they did. But even the creation of this first central bank itself was the result of a corrupt political deal. It wasn't the result of any kind of study or reasoning. And the corrupt political deal was this: they were in the process of moving the national capital from New York City to Virginia. George Washington owned a lot of property in Virginia. He told the advocates of a central bank, who are mostly New England and New York business people and bankers, I will sign the legislation for this bank if in return you extend the border, the boundary of Washington, D.C. to my property in Virginia, Mount Vernon, which it is known as. And they did, and he signed the legislation. We got the first central bank. That's how it came about. It wasn't the strength of Hamilton's arguments. It was just another crooked political deal. And so we got this bank, and what did it do? Here's what Murray Rothbard says was the effects of this first central bank. It issued millions of dollars in paper money and demand deposits, pyramiding on top of $2 million in specie. The bank invested heavily in the U.S. government, and the result of the outpouring of credit and paper money by the new Bank of the United States was an increase in prices of 72% from 1791 to 1796. The first 5 years, 72% inflation. And it was set up so that it would have a 20-year charter. And after 20 years of this, the U.S. Congress did not renew the charter. So we were central bankless for a while. And then, now associated with this, Hamilton and his associates, his political associates, also championed a large public debt. They wanted a large public debt. They wanted the government to be able to borrow money to finance whatever, big government, and of course a central bank to monetize the debt. And Hamilton's reason for a large public debt was very Machiavellian. He said it would be the wealthier people of the country who would buy the government bonds, and they would therefore be a political lobbying group for higher taxes to make sure there was enough money in the Treasury to pay off their bonds. And so that's the reason he gave for it. It wasn't economic stability. After my book came out, my latest book is not the Lincoln book, but it's called Hamilton's Curse, here for sale wherever books are sold. I was invited to be on a television program in the U.S. on MSNBC, on the Morning Joe television program, and they sat me down next to Patrick Buchanan, and the first thing he said was, "Alexander Hamilton is my hero." And so I knew it wasn't going to be a friendly interview, and it turned out to be a shouting match, and they tried to shout me down, and so I just gave up. I decided I'm not even going to try to say what the book was about. And they got very angry. There were 4 people shouting at me, and I'm just standing there. And but I did get the last word in. I thought, I'm the heck with the book. I'm not going to say anything about it, but I'm going to get the last word in. And I did. And I said, at least Aaron Burr had a good reason for shooting someone, unlike Dick Cheney. And so, that got a lot of laughs, because they were both vice presidents. Burr and Cheney were both vice presidents. They both shot somebody. And so that's pretty much the only thing anyone would remember who saw that on television. But Buchanan, he lectured me. He said he stabilized the public debt of the U.S. government, and he's very angry that I was saying, well, no, not really. He didn't do that. It's a myth. But listen to what the historians say about what he did. he did nationalize the debt. The state governments financed the American Revolution, and they incurred debt to do it, and so the individual states were paying off the war debt. Hamilton nationalized it as Treasury Secretary. And here's an example of what happened when he succeeded in nationalizing the debt, and his party, the Federalist Party, got their way. It became acceptable to have a large national debt. There's a historian named John Miller who wrote a history of the Federalist era, this era. He said, the national debt soared to a total of over $80 million. To service this debt, almost 80% of the annual expenditures of government were required just for debt service. And this is what Patrick Buchanan says was a good thing. He stabilized the credit of the United States government. During the period 1790 to 1800, payment of the interest alone of the national debt consumed 40% of the national tax revenue. For a nation whose government had been tottering on the brink of bankruptcy a few years before, this might well be regarded as a staggering burden of debt. But that was the idea. They wanted a big debt for this Machiavellian reason of growing government, to be much bigger than what the Constitution allowed for. By the way, during the debate over the central bank with Jefferson, it was Hamilton who coined the phrase implied powers of the Constitution. He said, if you read between the lines, there are implied powers. And Jefferson's response was essentially to say, I've read between the lines and there's nothing but blank space there. There's no powers there, because he was a strict constructionist. And so there's another historian named Adair, who was one of the editors of the Federalist Papers, the famous Federalist Papers, and he really had Hamilton's number, the number of the early champions of central banking. He said this, in the Federalist Papers, in the preface to one of the issues of the Federalist Papers, he said, with devious brilliance, Hamilton set out by a program of class legislation to unite the propertied interests of the Eastern Seaboard into a cohesive administrative party, while at the same time he attempted to make executive dominant over Congress by a lavish use of the spoils system. In carrying out his scheme, Hamilton transformed every financial transaction of the Treasury into an orgy of speculation and graft, in which selected senators, congressmen, and certain of their richer constituents throughout the nation participated. And of course, the central bank was a key component of this orgy of speculation and graft that was put into place. The bank, Hamilton's bank, which is called the Bank of the United States, went out of existence, but the War of 1812 was used as an excuse to bring it back. And so it was brought back supposedly to finance the war debt from the War of 1812. It was brought back in the year 1817, and it quickly created the Panic of 1819, which was the topic of Murray Rothbard's doctoral dissertation. It's also published as a book online by the Mises Institute. And so it did the same thing as it did, 72% inflation in 5 years for the first bank. The second bank creates the Panic of 1819. And so by the time you get to the 1830s, President Andrew Jackson became a mortal enemy of this bank, of Hamilton's bank. And there was a big showdown between Jackson and his supporters and the coalition that still existed, different people but the same purpose, the same coalition, the Special Interest Coalition for the central bank. And Jackson vetoed the rechartering of the Bank of the United States, and he was successful at it. He ended the Bank of the United States. And so for that period in American history, roughly 1840 to 1862, there was no central bank. And the economist Richard Timberlake, who's a good monetary economist, and Jeffrey Hummel, who's considered to be a sort of a monetary historian, have both made a pretty good case that this was probably the most stable period in American history in terms of monetary policy. It wasn't perfect, but it was they make a case it was arguably the most stable monetary system that ever existed in the United States for about a 20-year period. But Andrew Jackson, he issued a very eloquent statement in his denunciation of this bank, and it's a great statement. I sometimes even make copies and pass it out to groups like this. And Jackson has been portrayed by historians as sort of a backwoods redneck or uneducated, uncouth former Indian fighter who didn't know what he was talking about. But in his statement condemning the central bank, historians, I looked up what historians have said about this, in some books that treat this, American historians. And one of them says that this statement that I'm about to read to you in part is, quote, beneath contempt. So this is what the American history profession considers to be a contemptible statement on the issue of government and central banking. Jackson said this: "It is to be regretted that the rich and powerful too often bend the acts of government to their selfish purposes. Distinctions in society will always exist under every just government. Equality of talents, of education, or of wealth cannot be produced by human institutions, but every man is equally entitled to protection by law. But when the laws undertake to add to these natural and just advantages artificial distinctions, to grant titles, gratuities, and exclusive privileges, to make the rich richer and the potent more powerful, the humble members of society, who have neither the time nor the means of securing like favors to themselves, have a right to complain of the injustice of their government." He's talking about central banking, keep in mind. "If government would confine itself to equal protection, it would be an unqualified blessing. In the act before me, the act to recharter the bank, there seems to be a wide and unnecessary departure from these just principles," end quote. And so you wouldn't hear an American president say something like this, even if he went to Harvard or Yale or Princeton or someplace like that, as opposed to being an Indian fighter like Andrew Jackson was in his youth. But this is a very eloquent libertarian statement, trashing the central bank, and that's why the American historians say it's beneath contempt, as far as that's concerned. So we went, he was not only an Indian killer, which is a bad thing, but a bank killer, which is a good thing. And, but this was all resurrected during the American Civil War, which I call the War to Prevent Southern Independence, and with the so-called National Currency Acts. And so, so in America, we had this 126-year battle to have a central bank. And the reason I tell this story is that the standard story of central banking is that it's a public interest movement. The market fails. It's a market failure story. And we need central banking to stabilize inherently unstable markets, financial markets. But I'm arguing here that from the very beginning, it was always understood by the proponents of central banking that this was always a ruse. All this public interest language was always a ruse or a scam. It was always meant to deceive the public into accepting this institution, which they always understood would benefit a select few at the expense of the public. And certainly the record of American central banking shows that. You probably have all heard this statistic that when we finally got the Fed in 1913, the price level in America was about the same in 1913 as it was in 1789. But since then, the dollar is now worth less than 5 cents of what it was in 1913. And this is all done in the name of price stability, of course. And I used to have this chart on my office door at my university of some sort of quote from a textbook about the purpose of the Fed is to create price stability. And then I had the chart that showed the CPI from 1789 to 1913, and it's like this. And then you hit 1913, it's like a straight line up to 2008 or something like that. And my colleague, my faculty colleague next door is a monetary economist and a creature of the Fed. And he did not like that. He kept putting a series of other charts on his door that he thought would debate this. So we had sort of a silent debate with on our office doors over the Fed. But I don't see how you could have possibly debated the effect on, at least on the price level of this. And so, and I guess my time is about up. I haven't seen Christy stand up and hold a big sign. What's that? You give me the finger? She's sort of giving me this thing. Christy. I'm used to it. She's done it before. But I guess it looks like my time is about up, so thank you very much.